Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. It is my privilege now to welcome in Michael Rivero, founder and editor of WhatReallyHappened.com and a talk radio host. Michael is a renowned student and commentator on geopolitics, banking, financial markets, and many other topics, and it's great to have him on today. Michael, thanks for joining us.
Thanks for having me.
Well, you've got some real interesting things to say on the whole Greek situation. Help us cut through all the nonsense here. What is really happening over in the EU with all of this?
What is really happening here is an attempt to assert total control from Brussels over all the member nations of the EU, because Greece is not the only member state that is in serious financial trouble because of the problems that we have with the central bank generating more debt than money with which to pay the debt. And as a result, we've got Italy's in trouble, Spain is in trouble, France is in trouble, and everyone was watching Greece to see if they were going to be able to break free of the euro and the EU and go back to running their own business with their own currency, and there was definitely a plan to do that. But in the end, the money junkies won out. Tsipras has absolutely betrayed the Greek people who voted him into office. He went back on virtually every promise that he made. And in the long run, Greece actually wound up with an even worse deal at the end of it all, possibly as kind of a message from the European Union that they're going to punish anybody who dares stand up and defies the rules they've set up to basically enslave everybody under this system of economics. And we know that every nation that has one of these private central banks issuing the public currency as a loan at interest, it by design drives the nation and its people into hopelessly unpayable debt in order to use that debt to control them. There was a wonderful movie not too long ago called The Independent, talking about a bank that was sort of modeled on BCCI, getting into the arms trade business to stir up wars just so that they could loan money to both sides at interest and make money off of the conflict. And it was a very insightful movie, which is why the corporate media kind of panned it, and a lot of people haven't heard about it. But in the end, we heard from the German negotiators, their attitude was basically they had to toe a hard line. They were not going to cut Greece any slack whatsoever, because the moment they did, all of the other member nations of the European Union who are in serious economic trouble were going to demand exactly the same treatment.
Why doesn't Greece seem willing to ditch the euro? I mean, to many observers, it seems that would be in their national interest to do so. What do you make of that?
Well, certainly that's the way much of the Syriza party wanted to go. The recently resigned finance minister said that there was a plan. They had printed up drachmas. Some of them were even being seen on the streets. But in the end, either Tsipras' price was met, or he got blackmailed, but he just did a complete about-face and sold out Greece to the European Union money junkies. People are very angry at them. The civil servants have gone on strike over in Greece. I'm concerned that we may see riots, possibly even a civil war, because this is not what the Greek people wanted. I'm beginning to think the only thing that really makes a lot of sense is that Tsipras was persuaded to keep Greece in the EU. We know the United States certainly wanted that, because had Greece left the European Union, they would have also left NATO, and that would have drastically changed force projection for this coming confrontation with Russia. And so we know that the Greek government and the EU were under tremendous pressure from the White House to find some way to keep Greece in the EU. Probably a lot of back-channel deals were being made. The only thing that really makes sense is that Tsipras and everybody else were expecting this referendum to fail, or at least be close enough to be stolen, so then Tsipras could say, okay, the Greek people are okay with going back to more austerity. Then he would have had the political cover and justification for making the deal that he did. But the referendum, of course, was an absolute landslide. And the thing about vote fraud is it can shift an election a few points. It really can't reverse a landslide without being obvious that that's what's happened. And so that's the only thing that really makes sense, is that everybody was betting the referendum was going to fail. When it didn't, Tsipras had to go on and make the deal he was told to make anyway.
Backing up there a moment, you actually think military action is a possibility at some point? I mean, could we actually see some sort of a war develop out of all this?
Well, unfortunately, we very much could. We might see the Greek people rise up and kick out their Eurocentric government, and immediately their first move would be to pivot toward Russia. Russia is holding out the red carpet. BRICS is agreeing to finance Greece for rebuilding industry and jobs. Right now, the problem with all these bailouts that Greece is getting is the money comes in one door and immediately goes out the other, back to the banks holding Greece's debt. None of this bailout money stays in Greece to actually improve conditions there. So if there was an uprising that kicked out the Greek government, I'm expecting that the U.S. would basically go on in the way they've done in Yemen and Libya to slap the people down and say, look, you're going to accept our puppet rulers and you're going to accept being enslaved to our financial system. So, yeah, we could easily see a civil war erupt in Greece out of this.
Here in the U.S., what do you think our Fed's response will be to the whole situation as this unfolds in Europe?
Well, the Federal Reserve is watching events very, very closely. The reality is that all they've done from the economic point of view is kick the can down the road just a little bit further, because the reality inside Greece, they still don't have the jobs to allow the Greek people to trade their labor for new wealth to pump into the system to make the payments. The terms of this new deal are absolutely draconian, where Greece basically loses its sovereignty the first time they make a mistake. They've already had to surrender control of much of their national assets to German control for privatization, the airports, various other facilities, even the banks themselves. And so basically it's a foreclosure, for lack of a better word, from the point of view of the European Central Bank, the IMF, and the World Bank. But sooner or later, that debt is going to come due again, and there's not going to be a payment available coming from Greece. They'll talk about another bailout, and there'll be more demands, but at some point they're going to hit the wall. There's going to be nothing left in Greece to plunder. Greece is not going to be able to make the payments. Nobody's going to want to create more money to run through Greece and basically bail out the central banks one more time. But this is getting to be an emerging pattern all over the world, and whether it was Cyprus or Greece, the trouble that we're in here in the United States of America, because by design, all private central banks create more debt than money with which to pay the debt, and the debt grows and grows and grows until finally it collapses the entire system. And that is always the end. What makes it different this time is because of globalism and all the interlinking and all the derivatives. When it goes down, it's going to go down everywhere at the same time, which is going to be a once-in-a-lifetime opportunity to restart the global economy without private central banks in charge of the various currencies.
What do you make of the war on cash that's been developing? Should it concern people, and why might it be so dangerous?
Well, it's dangerous because having money in your own pocket is a fundamental freedom for people to simply walk around with wealth and buy whatever they want and not have to go through a card. The issue with banning cash, I think, is intended to transfer the cash that's in our pockets back to the banks to put on their balance books to keep them that much further away from default. It's estimated there's about $1.3 trillion in cash in the pockets of the American people. The bankers would love to have that forced back into their bank accounts so that they can play with it. And, of course, if there's no such thing as cash, it makes runs on the bank absolutely impossible. All you can do is go in and say, you know, move my money from your bank to somebody else's bank, but it's still in the banking system. The bank you move it to can turn around and send it right on back to the bank that's in trouble. This is all about protecting the banks. And, of course, along with a cashless society, every transaction you make comes under government scrutiny, whether every newspaper you buy, every jelly donut you buy, what movies you go to comes under the total surveillance state. I think there are serious practical reasons why they're not going to be able to ban cash. Certainly for the Central Intelligence Agency, which controls much of the world's drug traffic, they have to have untraceable cash in order to carry out these non-sanctioned intelligence operations. And let's be very honest, what are the politicians going to tuck into the G-strings over at the strip club if they don't have cash anymore?
Yeah, it's definitely a very troubling sort of movement going on there. It's very anti-free liberty for sure. I couldn't agree with you more. Texas recently followed suit of some countries when it announced it would repatriate the state-owned gold and rescue it from the hands of Wall Street, and will soon be storing it inside the Texas borders. What's your take on that announcement? What kind of statement was that? And what do these recent announcements by Texas now and Germany and the Netherlands and a few others before them say about the trust factor among and between these sovereign entities?
Well, trust really is a big issue. Now, the way the New York Federal Reserve and, for that matter, the Bank of England, the Bank of France, and J.P. Morgan has a private bullion depository, they function like a safety deposit box. Countries will rent space in the gold bullion vault to store their gold, and the banks are not allowed to go in and use it. It's just like your safety deposit box at the bank. If you rent a safety deposit box and you put in some gold coins and your aunt's heirloom bracelet, you can at any time go on in and remove all of that material. Well, it seems that the Federal Reserve has been playing fast and loose with other people's gold. They've been leasing it out the back door to drop on the market to keep physical gold and silver prices down so that people don't abandon their savings accounts and their stock market portfolio to buy physical metal. We know that the amount of gold and silver being traded these days greatly exceeds the output of the world's mines, so it's got to be coming from somewhere. And this triggered some concern because over in Germany, they were getting some gold bars that had the hallmarks of Fort Knox and the New York Federal Reserve and discovered they had tungsten cores. So there's some fakes. So Germany basically said, look, we put our gold in the New York Federal Reserve during World War II because we didn't want the Russians coming in and taking it, but that's all over and we're all friends, send it back. And they got the big stall. And Germany said, okay, can we at least come in and do an audit and look at it? And the New York Federal Reserve said, no, we're not really set up to do that. Just trust us. The gold is still here, and we'll get it back to you in maybe 5 or 6 or 7 years. And this triggered a crisis of confidence all around the world because what little gold has already been returned to Germany are not the original stamped and numbered bars Germany sent over. And tests have shown that the gold being sent back to Germany is nowhere near as pure as it's supposed to be. So they're playing these really reckless games, and this has triggered something like 7, 8 other countries wanting their gold back. Texas wants their gold back because there's a growing suspicion it simply isn't there at all. We actually covered this last year in an episode of America's Book of Secrets on the History Channel, where all of a sudden people are wondering, is the gold really there? So can you imagine going into your bank, to your safety deposit box, and the bank manager says, I'm sorry, I can't let you take anything out of it, but here, I'll let you look into it from across the room. And you see something that kind of looks like some gold coins and maybe something that might have been a bracelet but not necessarily your aunt's heirloom bracelet you put in there. And the bank manager slams the box shut and says, there, go home and be happy. That's kind of the situation that all of these foreign nations and foreign banks and even now Texas are dealing with, that the gold that they paid the New York Federal Reserve to store wasn't stored but was actually rehypothecated for various financial manipulations. And the New York Federal Reserve's rationale is, well, we leased it out the back door, but since it's only a lease, we're still technically in possession of it. That only works if they're able to get the gold back, and right now they're not. And this is why people are getting very, very nervous about what's going on. We could easily see a repeat of Roosevelt's 1933, I think it was, ban on private ownership of gold bars and gold coins in order to rescue the banks from their crimes one more time. But there's no question that the banks are behaving very badly and certainly are very untrustworthy with other people's gold bullion. So, people need to basically, if you've got gold or silver and you should have it, I wouldn't trust it in any kind of gold depository owned by the banks or the government. There are private gold vaulting companies that are much more trustworthy. But it is amazing how the New York Federal Reserve, which has tried to cultivate this image of trustworthiness and legitimacy for the 100 years it's been in existence, and all of a sudden we're finding out that they've actually been playing dirty with other people's property.
And that leads me right into my next question. The Fed has heavily resisted an audit of its inner workings, and the grassroots movement that started the ball rolling with the Audit the Fed initiative may now be turning its attention toward the gold at Fort Knox, where there hasn't been an audit in over 50 years. I think I know your answer to this, but is the gold there? And if not, what do you think's happened to it?
Well, there is something that looks like gold there. In response to these growing concerns, the U.S. government or the U.S. Treasury Department refused to do an audit. I think this was back in the late 70s after Nixon had ended gold convertibility for the U.S. dollar, which technically brought the Bretton Woods Agreement to an end. And they had a big press conference where they went into Fort Knox with cameras and a bunch of politicians, and they opened up one vault door and showed a lot of gold bricks. But nobody was allowed to touch them. Nobody was allowed to pick them up. Certainly nobody was allowed to run any kind of an assay on them. And of course, back then it wasn't known that you could detect a tungsten core with an ultrasound probe. And it was just basically, here, we're showing you the gold, go away happy. But yeah, at this point, there is reason to doubt that all of the gold that is the property of the American people is still in Fort Knox. Over time, it's probably been transferred to J.P. Morgan, the New York Federal Reserve, just dumped on the market because they're desperate to keep physical gold and physical silver prices down. They're certainly overprinting those paper contracts. They're very concerned that people are so distrustful of the stock market and the banks that they're going to start emptying their accounts and just putting their wealth into physical silver and gold, which are wealth preservers. They hold their value. They're universally recognized as having a value. You can go anywhere in the globe with silver and gold, and you will find somebody who wants to trade you something for it.
Is this potentially an issue of national security, or is that overstating it, the fact that, this gold might not be there?
It is an issue of national security because were there to be a gold run on the New York Federal Reserve, nations have gone to war over one nation confiscating or stealing their gold and silver. This could provoke a war. Certainly, it would destroy all trust in the American-centric financial system at a time when so many other nations on Earth are trying to move away from a dollar-dominated global economy, because as they're seeing with Russia and with Iran, the U.S. government has weaponized the global economic system and uses the world's dependence on the U.S. dollar as a club to coerce compliance. We're always hearing about all these deals where the U.S. is offering financial aid to a country, but they have to allow GMO seeds in, various other things like that. And looking at what's going on with all this sanctions nonsense, I think the world is awake to the realization that the U.S. government has weaponized the global economy in order to exert its control over other countries. And there's definitely an accelerating trend away from using the U.S. dollar, and the U.S. government's desperate to stop it. That's why all of a sudden we've gone to talking about war with Russia and China. Literally, the war is against the yuan and the ruble, which are rising threats to the global dominance of the U.S. paper dollar, which is not seen as all that trustworthy anymore because it's not backed by anything except a promise of future slave labor of the American people. That's what the Treasury bonds are, a promise that somewhere down the road some American will have money taken away from them, nothing given back for it, in order to make good on the Treasury bonds. And if that isn't slavery, I don't know what is.
Yeah, I definitely think we're going to continue to see financial warfare unfold, kind of a new brand of warfare here over the next several years. What role should gold and silver play right now for someone who's hearing about all of these global economic and currency issues? What should they be thinking about, and how should they be viewing gold and silver?
All this talk about bail-ins, with the Congress having changed the law last November to make bank savings account holders unsecured investors in the bank and therefore liable to share the bank's losses. The advice we give out to all of our readers and listeners is you should have no more of your wealth in the bank than you need to cover your immediate obligations. You should have the rest at home under your own control, and certainly some of it should be in physical silver and physical gold, under the mattress, buried in a mayonnaise jar, out by the pineapple plantation, whatever it takes. And if they do ban cash, unless they ban physical silver and gold coins and bars along with it, then what you should do is go down to the bank with your little plastic card, or go to your broker, like your company, and say, give me as much silver and gold as I can on whatever's left in my bank account. Because really, if you remember how this country started, the money had a fixed value. The money was not the coin or the paper. The silver content or gold content of the coin was the money under U.S. law. The paper notes were just claim checks for convenience. And once you had that coin in your hand, there was nothing the bankers or the government could do to change its value. But over time, first of all, they made the money imaginary, then they made it debt-based, and now they want to take away the physical tokens of paper and coinage so that the banks own all the money, and you're just allowed to use it every once in a while with, various fees and interest being charged for the privilege.
Well, it's a very interesting world that we're living in right now. Lots of things happening. I definitely enjoyed speaking to you, and thanks for explaining a lot of this and your wonderful insights. It was great talking with you. I hope we can do it again. And now, before we let you go, tell our listeners a little bit more about your website and also your radio program.
Well, my website is whatreallyhappened.com, and I have a daily talk radio show Monday through Friday on the Genesis Communication Network from 3 p.m. to 5 p.m. Central U.S. time.
Well, that will do it for this week. Thanks again to Michael Rivero, founder and editor of whatreallyhappened.com. Make sure you check that out. And check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.